This is Bloomberg Businessweek. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec from Bloomberg Radio.
Well, it was the week of the IPO, the largest IPO this year, Arm. And it went off pretty successfully. Shares rallying almost 25% yesterday, but they're down about 1.5% today. So 22% higher than the $51 per share price that they set for the IPO. Now, launching a successful IPO was also important for the parent SoftBank, which had bought the company in 2016 for $36 billion, but had flameouts like WeWork, DoorDash. However, SoftBank did leave a whole lot of money on the table. Bloomberg reporters Ryan Gould, Amy Orr, and Ian King wrote a play-by-play of how the final day wrapped up and why it matters. Ryan, I'm pleased to say, joins us now via Zoom. Ryan, thanks so much for joining us. Arm's IPO was, by your reporting, 10 times oversubscribed, I believe. How did bankers settle on $51 a share?
Jess, Simone, thanks for having me. It was quite the week it turned out, particularly that final pricing meeting. I mean, all being said, I think probably what ended up happening was a fairly normal meeting. Bearing in mind, obviously, as we say, this was a SoftBank IPO. Massar probably felt that there was much to sort of write the record on, given what had happened with a few of the other names you mentioned at the top there. But yeah, that Wednesday meeting, that was something that, there was the case laid out for sort of $52 a share. There was the case laid out for $51 a share. And ultimately it was left to Son, to Massar, to decide that actually he wanted to play this one safe, play it smart, some might argue, and leave sort of basically $100 or so million on the table by choosing the 51 a share. That being said, $51 a share was still the top of the marketed range. This is something that he felt could set the company up for success come yesterday, Thursday, it started trading. And, as you mentioned, we're up, still up 22% from yesterday. So I think he's probably looking towards, today being Friday, the end of the week for the trading, they're in a good position. I know that the Arm folks they'll be feeling good as well.
Especially when you're thinking about this year's biggest IPO, when we're looking ahead to what this could potentially mean for other IPOs coming down the pipeline. It's been so challenging, especially over the past year. Obviously, that correlation when you think about what was happening with the Fed's most aggressive hiking cycle in decades. What is it shaping up like, do you think, moving forward in the near term, whenever you're speaking with your sources as far as what this means for other companies that could potentially go public now?
Yeah, I mean, make no mistake, this is a huge event for the rest of the market. I don't think we're in a position just yet where we could say, the floodgates will open. But certainly through the end of this year, through the end of 2023, we're in a position that now you could probably start to see premium assets, marquee names coming out and thinking, okay, well, we're going to push the button. I mean, just to name one, Birkenstock, the German footwear maker, they filed. They are looking to go. Probably, we could see them setting a price range later this month. People know Birkenstock. People know how their heritage, their brand, and they feel confident enough. And I think seeing Arm getting off to such a great start yesterday and today in trading, it's a boon. It's definitely a shot in the arm. That being said, not every company is going to be able to come out and think this is the time for them. Many sources are saying to me and others that 2024, the first quarter of 2024, as soon as you get that sort of full year audited results in probably no later than the end of February, will give you a better chance. So you can put audited results in front of potential investors on the roadshow versus the 9 months that you'd only be able to provide as of now. That, I think, should give some investors as well, much more comfort to think about, let's see how Arm plays out. Let's see what happens to Birkenstock once it starts trading. And obviously, I haven't mentioned yet Klaviyo or Instacart, both of which
popular
are
names
due to trade next week. So yeah, I mean, obviously, I would caution and say that Arm is, Instacart is clearly not like Arm, and Klaviyo is not like Instacart. So, when you're thinking about these things, it's all a little bit relative, and I do think you have to be a bit cautious. But there are some good signs that into next week we could be in a position where 3 IPOs in a fortnight could get off to Aurora.
Yeah, and it's not like every SoftBank IPO has always done extraordinarily well, even, if they had a bit of a share pop on the first day. You've been reporting on Instacart as well. I believe you broke the news that the company was raising its price range for its upcoming IPO, which it sounds like price on Monday. What are the big questions that you're asking your sources right now around how this IPO is going to go?
Instacart's an interesting one, and we reported this morning that they are looking to price Monday evening, start trading on Tuesday. Much of the question, I think, around Instacart is not so much around the business model. It's more around, as an IPO process like this unfolds, how are companies and their executives and perhaps in other cases sponsor backers thinking about pricing? Just how aggressive can you be on valuation in a very sort of valuation sensitive environment? Just exactly how far can you push the boat and not sort of scare off investors? Because I think when you think about going on a roadshow, you're wanting to say you've already identified maybe 100 or so accounts that you absolutely want in your book. I mean, there are always going to be instances where your top 5, top 6, maybe 1 or 2 of those won't actually agree to come in. So I think it's a case of thinking about how can we please as many people as possible. One of those things is not pushing the valuation too hard. It's clearly a sign of strength in Instacart's case that they were able to come out this morning with that $2 hike to the range. It was always sort of seen as an opportunity, even at the beginning of the roadshow last week, that, perhaps it was very attractively priced. There was perhaps some little wiggle room, and clearly they've taken advantage of that. But I think as a collective sort of set, when we look at this IPO window that we're currently in through to the sort of Thanksgiving period, the massive question is around how far can you push pricing, just given how sensitive investors are in this higher rates environment, perhaps with anticipation of a softer landing into next year. We really don't want to be thinking about scaring off investors even further or again from IPOs.
Right. And I mean, especially with a consumer that may fray. I mean, isn't that what we've heard all earnings season? The consumer could fray a little bit here.
Yeah, exactly. I think, even there are, in Instacart's case, in Arm's, there has been significant interest even from retail investors, so to speak. And when you think about Arm, yesterday was one of the sort of most highly tracked stocks, new stocks on Fidelity. I mean, people are wanting to get in on this as well. In regards to, the actual spending of it, Birkenstock has just put out a revised filing today with the 9 months and with 9-month results through September of this year. It did not come with a price range, but, things are looking rosy. I mean, it must be said that, things are looking rosy and, they're hoping to getting to a position by the end of this month where they could be pricing and trading before Columbus Day.
All right, Ryan Gould, U.S. IPO reporter at Bloomberg News, joining us on Zoom from New York City. Always a pleasure getting your perspective on all things IPOs, and especially what's shaping up when it comes to Instacart and these others that are coming up shortly.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern. Listen on Bloomberg.com, the iHeartRadio app, and the Bloomberg Business app. Or watch us live on YouTube.
Simone, I don't know about you, but whenever you are in a particular checkout online, depending on whichever retailer you're using, do you ever abandon your cart? Do you keep things in there?
I don't abandon it, okay? I have to say, my Amazon cart is like enormous.
Mine is too.
Other retail, at least it stays. Some other retailers, I put stuff in the cart, I don't click out, and then I'm like, wait, I spent all this time looking for something.
Right. And so I do something similar, especially when I'm on Amazon too. There's things that I'm sort of eyeballing, but hey, maybe if it drops in price, if it's Prime Day or go into the holidays, I'll keep it. But there is a company that's trying to remove that friction when it comes to retail and when it comes to that checking out dynamic there. And who better to chat with us about this than Maju Kuruvilla, CEO of Bolt. and it's a payments platform and company, and he's going to talk to us about how AI can help the challenges that are facing the e-commerce world. He's actually joining us on Zoom from Seattle. It's great to have you back and speaking with us again. For those who haven't heard you yet on our program here, talk to us about what Bolt is and what it does.
Great to be back here. The problem you just mentioned, which is people come to an e-commerce site, browse around and end up not buying something. And that is such a huge problem. Like around 98% of shoppers coming to a site does not end up buying something. So Bolt is simplifying that process and make it efficient. So more people coming to the site end up buying.
How many retailers at this point use Bolt?
We have hundreds of retailers using Bolt. And if you look at the last year, we historically has been very focused on small and medium businesses, and we introduced our enterprise product last year. So now we have very large enterprise retailers using our product. For example, Revolve. They started using Bolt last year. I worked closely with their leaders. They introduced Bolt, and they saw a 4% increase on revenue just after turning off Bolt.
So we know that AI is all the hype right now in so many different industries that it touches. What is it particularly about AI that you think can be used to solve the friction between the issues when it comes to shoppers that might be abandoning some of their carts and the retailers on the other side that are trying to build some of that brand loyalty?
Yeah, AI, as you can hear from the industry, there's a lot of progress happening from a technology perspective. And e-commerce especially, is a great place to get a ton of value from the AI side. First and foremost, you think about if you can recognize a shopper the minute they come to your website. And if you can recognize them, can you provide a very personalized experience for that shopper and make great recommendations? And once you decide to buy something, can we make that buying process very easy and simple, avoid any kind of fraudulent charges, and make that whole process complete? So from a Bolt perspective, what we are looking at is the root of making all those things possible is knowing the person. Like, can we identify the shopper so you can provide all this great experience? So what we are focused at Bolt is creating this large shopper network that we can track the shoppers across different brands, especially the large brands, and help the brands to identify them so they can provide this great personalized experience using the power of AI and maintain a lifelong relationship with them.
Well, I understand you just recently hired a new president, new CTO, and you have some new big tech initiatives for e-commerce, for checkout, kind of in the lineup. Can you talk to me about what you're trying to do that you weren't doing before?
Yeah, so as we moved into the large enterprise retailers, what we realized is, helping people at the checkout is great, but recognizing the shopper throughout their shopping journey is so important. So we are looking at the identity for e-commerce across the board and using that identity to power the new capabilities like AI. So as we were looking at the new roadmap and technology, it was important to bring in like people who have done this before and have a ton of experience. So couldn't find anyone better than Cal Raman, who drove a lot of early growth at Amazon and Walmart when they were trying to get into the e-commerce. And he is going to help us drive our vision forward on building one of the largest shopper network for e-commerce, and then building that identity platform, which will power all the AI capabilities for the commerce world.
Whenever you're tracking this, are you able to pull shopping behavior in a sense to see how Americans are spending?
I mean, because we are able to see the actual shopping as well as their buying behavior, we are able to see a lot of data that allow us to see some of the trends.
So
and
what I'm curious about, though, and the reason I ask, I want to know, what do you think that tells us about the economy? Because so many people talking about the consumer and what it means and looking forward, and they're thinking there's going to be a pullback. Are you actually seeing any of that?
Well, even with all the views on how things can go down, what we are seeing is there is a continuous improvement on the e-commerce side. Like there is more sales, but the price is increasing. Now the question is the more sale coming from the increase in price, or is it more people are buying? And when we look through the details, what we find is it's more sector-based or category-based. In certain categories, people are shopping more, while some categories they are seeing less than what they saw during the pandemic peak. But one thing is very clear is consumers are still focused on deals and discounts. So there is a real high focus on that. And so the retailers who are able to understand that consumer behavior and provide them very targeted response or deals are seeing obviously a much higher volume than others.
Can I ask you a little bit about just what it's like being a tech startup at a tech startup right now? What are you seeing in terms of it's been a difficult year or two probably. What are you seeing now? Just give me a lay of the land as someone who's had to deal with a tight labor market, but also potentially had to lay people off in the past.
I mean, it's a little bit about, back to the basics on how do you define and find sustainable growth, and how can you have unit economics when you drive that growth. So really focusing on where that growth coming from. For example, for Bolt, we found that our growth is coming from our new enterprise product, helping our brands, and we found immediate market success on that product. And hence I mentioned about the Revolve case study, clearly demonstrating our products are working. So we had to prioritize. We had to shift our priorities to things that are really working and clicking in the market, and then deprioritize the things that didn't really yield the results what we thought. And then it comes to like having the right people and the right talent around you to drive that vision forward. And it all comes at the bottom line is, I spend an enormous amount of time to work closely with the customers and really understanding what matters to them, what are some of the top problems they have, and then aligning our product roadmap so we can work closely with them and deliver results for them. That is what they are looking as.
So we only have about a minute left, but what's your view on sort of the future of AI and how it impacts this business?
I mean, there are two top things that a lot of retailers, top of mind for retailers. One is returns, and one is like omni-channel. Like a lot of people are buying online and picking up at store. And so when I think of AI, there are very tactical applications on like, if you know the consumer, if you know their behavior, how can you help reduce some of the return problems? Or how can you target your customers better at a very deeper level so you can understand how much they are buying online, how much they want to pick from store, and then providing them very targeted experience from that. But a common component, if you look at both of this, is knowing the consumer. So to do any kind of personalization, you got to know the person. And so at Bolt, we really focused on knowing that person, building a consumer network, and then empowering the data to bring some of that AI capability for retailers.
All right, Maju Kuruvilla, CEO of payments company Bolt, joining us to talk about how AI can help the challenges facing the e-commerce world. Always a pleasure speaking with you, and thank you so much for being back with us. But really interesting conversation, Simone, especially when you think about what we were talking about when it comes to us leaving some of our favorite items there in our shopping carts.
You're listening to the Bloomberg Businessweek podcast. Catch us live weekday afternoons from 3 to 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and YouTube. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Well, the COVID-19 pandemic may be over, but unfortunately the virus hasn't vanished. Earlier this week, the CDC signed off on new vaccines from Moderna and Pfizer-BioNTech for people ages 6 months and older. Major pharmacies, including CVS and Walgreens, are already offering appointments for it. Jess, have you haven't gotten a vaccine in a while, have you?
It's been a little bit, but I definitely have gotten probably at least 4 or 5 when you conclude all of the boosters. But I feel like it's time for another booster soon, as well as a flu shot.
Well, that is the question. And we have Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, joining us to explain. So doctor, the CDC recommended, and I'm quoting here, everyone 6 months and older get an updated COVID-19 vaccine. For the sake of hypotheticals, say you're young, healthy, and maybe 30-something and, got some shots, all the shots that you needed 2-3 years back. Does this mean you have to get another vaccine now?
Great question. All of this is coming up because we are seeing a sort of a mini surge, an increase in the prevalence, really over the last 6 months of COVID. Slight increase in hospitalizations, but the good news is slightly decreased deaths from COVID. So to your question, the majority of people in the United States, either because they've had COVID, whether they knew it or not, and or because they got vaccinated, have antibodies and probably T cells, which really explains why we're seeing perhaps really a decreased death rate. So although the CDC did advise or did suggest that over 6 months of age would be appropriate, many other countries really are saying they should be targeted to specific groups, like over 65. And, as also you're alluding, because we do see some side effects, some adverse effects that are not tiny, perhaps the question is, should we target the populations? And I think everyone agrees, above 65, lung disease, pregnant women, people who have immunocompromised states, definitely. Young, healthy women such as Simone and Jess, we think healthy, and certainly young men, where we do see an increased incidence of myocarditis and some other side effects. They may not really need this as a priority. Certainly, again, just for that older age group, certainly over 60, the RSV vaccine, respiratory syncytial virus, very common cause of hospitalization and morbidity. The new vaccine recommended. Flu shot, the efficacy varies year to year. Some years they hit it right. Some years it doesn't work so well. But certainly that seems to be safe and reasonably effective, a low incidence of side effects. But to answer your question directly, if you've had COVID or if you've had a vaccine, the benefit of this new XBB variant, which was kind of the formula that was developed, is really sort of an older variant. We've had a lot more variants since then, and how well the new vaccine will protect against BA 2.86 and EG5 and so forth, a little unclear. If you're older, definitely you should take it. If you're young and healthy, I would read about it, think about it, maybe talk to your doctor.
What about when it comes to the flu shot? Should you get both of these at the same time? Do you space it out? How does it work?
Right. So all of these things are targeted to when we think there's going to be a surge. Typically colder weather, people are indoors, no fresh air. So ideally, if you can get lots of fresh air, exercise, some sunshine, plenty of rest, your immune system is better. So the timing really is sort of end of September, now to end of September, beginning of October would be very reasonable to get these shots. I would say flu shot, now for the next month or so would be helpful. RSV, so far we think is maybe not yearly, but like a one-time shot, maybe next year a booster. I would wait a couple of weeks in between. We definitely see more side effects if people take 2 or 3 shots at the same time, much higher risk of problems. There's no need to do that. It is a little bit more of a time inconvenience to come back every couple of weeks. But if it were me, I would not take them all at once. I would do them sequentially.
Right, and so is getting sick. That's a time inconvenience, I think, certainly, as well as a health inconvenience. Look, the emergency, the health emergency that was in place for a very long time expired in May, as I understand it. Is it going to be challenging to make sure a large part of the population gets the vaccine, under these new post-pandemic circumstances?
I'm seeing in my patients, which is obviously anecdotal, I think there is a bit of vaccine hesitancy. I think people who've had the vaccine realize they've gotten COVID, maybe milder and probably less hospitalization, so there's some benefit. And I think young people like yourselves, raise the question, do I really need it? There's definitely some vaccine hesitancy, but patients who have underlying lung disease, diabetes, overweight, or elderly, or if they're traveling, many people are traveling to Europe, trapped on a plane with 300 people. There probably is some benefit to a couple of weeks before you travel to do that. You do get a bump in antibodies, which is good. Those do wane over a few months. So, maybe by January or December, those antibodies may be lower. So there's definitely some protection. I don't think we can say yet how much, but I think if you've had COVID or had prior vaccines, your risk of dying from COVID, again, if you're otherwise healthy, is pretty low.
We have about a minute left. I'm curious because I've had a number, just kind of anecdotally, where people have been traveling overseas that have obviously been starting to get COVID more often. What's your sort of take as we head closer to the holidays in the traveling season for the holidays as well, as far as what variants are out there at this point?
Well, there are many variants. Some of these have like 30 amino acid changes. There are probably 15 or 20 different COVID variants. And that's the problem with the vaccine that's a monovalent. Like it can probably help, but it's certainly not going to target these. I talk to people about Paxlovid, which is a pill. Again, you have to talk to your doctor. It depends what medications you're on. Some have to be stopped, like statins. But Paxlovid is great. If you get COVID, if it's more than a mild case, it's great. There are some doctors, not officially, who give patients who travel Paxlovid so that if they do get sick, they may have it if they're traveling abroad and otherwise can't get it if they test and turn positive.
We only have about 20 seconds left, but what's the top question that you hear from people who are still, hesitant at this point?
I think they ask good questions. Doctor, do I need this vaccine? Is it going to make a difference? I've had COVID, I've been vaccinated, and I say it's a difficult decision. There are some adverse effects, not a lot, but definitely some. If you're in a risk group, I advise take it and talk to your doctor.
All right, Dr. Ian Lustbader, clinical professor at medicine at NYU Langone, joining us. We'll have more coming up. This is Bloomberg.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Jess, Menton, and Simone, Foxman here, the Bloomberg Interactive Brokers Studio on this Friday. We have just under 20 minutes to go before the closing bell, but still, when you look on a weekly basis, S&P 500 trying to potentially keep those gains, but it's just marginally lower for the week. But to break down everything that we saw this week, who better to bring in than JJ Kinahan, Chief Executive Officer at IG North America, joining us on Zoom from Chicago. I've known you a long time, JJ. And getting your perspective on the markets, all things when it comes to macro, especially with the economy and sort of the trickiness of investing right now is amidst a lot of this resilient economic data. I wanted to start off first because we've been focused so much, especially today, on this UAW with this unprecedented strike when you are looking at the big three automakers with Ford, GM, and Stellantis. What's your take from more of a market perspective and what this could potentially mean when you are looking at these stocks?
Well, great to be here. And, it's really interesting what you start off with. And that is you're seeing some of the conundrum that investors are going through right now. If I said to you that the big three automakers are going on strike and they're not really sure where the strikes will take place and it's going to be very confusing, you would think, my God, those stocks are about to get nailed. And instead, what do you see? On a day where the overall market is getting absolutely crushed, you see GM higher by over 30 cents. You see Ford break even to up a couple of cents. So from that point of view, as an investor, it makes it very difficult as you're thinking about, okay, where should I be? Where should I put my money? So we continue to see these mixed messages in the market. This is a little bit of an ugly way to end the week, to be honest with you. As you just mentioned, the S&P giving up the gains for the week. You also have crude oil with its highest close we've seen so far this year. I think that's one of the most significant things we'll see in terms of inflation. And we see, yields closing their highest so far this month. So that doesn't create a great picture. And there's one more thing I'm going to throw in there that starts to give me a little bit more a note of caution, and that has been the incredible strength of the dollar as we're going to head into earnings season soon. And I really think that's going to start to affect sales at some point here, as some of the foreign sales, particularly in the tech sector, the Magnificent Seven, Elite Eight, whichever of those stocks you want to call it, may have a little bit more trouble with their go-forward sales.
Let me pull you back a little bit to this UAW strike. I believe there was a calculation out there by Anderson Economic Group that 10 days of a strike, and it's unclear whether they meant the actual factories that the strike's happening at or not exactly, would hit U.S. GDP by $5.6 billion. Now, that's a big number, but it's not an enormous number. If we start seeing this last for, a week, 10 days, 2 weeks, where are you looking for pockets of weakness?
Well, I would say that pockets of weakness will be a bit everywhere, and I think it'll affect the overall market. And the reason I will say that is because you also have some other strikes going on at the same time, some strikes being threatened. So you see that sort of slowdown start to happen. At the same time as you're happening, it does, as I mentioned, the price of gasoline is going to hit people directly in their pocketbooks. And don't forget, this also puts more pressure perhaps on some railroads and trucking, which, again, is there some slowdown there? The auto workers are such a big and powerful union that we've already heard from some of the Teamsters unions that they are going to, in protest, slow down or not work as hard. Don't forget, that's the people who are driving those trucks, loading those trains. So I actually think if this lasts for any period of time, the effect may be bigger. And that's truly what I overall worry about, is that the entire transportation sector gets affected, which drives up cost of goods. And, we just lived through this whole supply chain shortness, which it feels like we've come out of over the last few months. Does this lead us back to that situation?
You brought up the U.S. dollar and what that could potentially mean for earnings. When you're looking at the DXY, I know the 103 level was very key for a number of traders, even coming into September. And obviously that level has been breached. Right now it's trading around 105. What levels are you watching for resistance and support as far as what that could mean in the dynamic for the U.S. stocks?
Well, old resistance becomes support, so that 103 level now becomes the support, so to speak. But the 106, just under like the 107, 105, 85 to 106 in that area will be an area that you need to watch. If we can break through that, I actually think that it's going to be a major effect, if you will, on earnings if it lasts for any amount of time. Because we've seen this incredible move versus the British pound and the euro over the last few weeks, and it really is amazing. One other level I will bring up, if you don't mind, relating everything back to the S&P 500 and what we see there, is this 4440 or 4460 level. I'm sorry, we're trading about 4450 at the moment on the S&P 500 cash. Those who are bullish, you'd really like to see us close back above that. And so this last, 15 minutes or so of the trading day becomes so interesting, because don't forget, it's also triple witching day. Right. And on triple witching, you will often see on the close, more pronounced moves, if you will, in those last 10 minutes or so. Today, given that we've seen great volumes, we've seen huge moves, would not surprise me to see us have a very big move on the close.
When you say 4460, what's the significance for that particular level? Is that a fib level?
If you go back through to August, that was one of the levels that we really had a lot of trouble going back and forth through. And so it becomes one of our biggest levels for support right now.
I want to ask as well about one of the big headlines in the last day or so, the possibility that Disney could sell off some of its ABC assets. Does this mean anything more broadly in the market? And, do you think it'll happen? Sorry, we only have about a minute here.
Do I think it will happen? It certainly seems to be a will that it does happen. There's a lot to be considered as to where it goes because, again, ABC and some of the broadcasting of games, et cetera, I actually think one of the true values of ESPN. And so we'll see what happens there. Does it mean much for the overall market? What I really think it may mean is the next area you start to look at is so many of these streaming services, because now streaming, particularly if you're a sports fan, has become so expensive because, you look at Major League Baseball,
right.
You might have the same team playing in 5 different places over the season. That gets really expensive for people.
Mm-hmm. We only have 10 seconds left, but if you could ask Pal a question next week, what would it be?
What does he actually see the rates being 1 year from now? I don't think it actually matters so much over the next few months.
All right.
But, that's the longer term perspective.
Thanks so much, JJ Kinahan, Chief Executive Officer at IG North America.
This is the Bloomberg Businessweek podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 3 to 6 Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.